You know that feeling when your trading screen looks like abstract art gone wrong? Lines everywhere, indicators blinking.
Oh, yeah.
Each one supposedly giving you an edge, but together they just create a massive headache.
Like trying to tune into 10 radio stations at once.
Exactly. It's just noise.
That overwhelming sensation is pretty much exactly what we're tackling today. You sent us a really interesting book, Trading with Ichimoku Clouds, from the Wiley Trading series, Patel.
Yeah, seemed like a good one to unpack.
So think of this deep dive as, your personal deconstruction of a potentially powerful trading system. It's actually been a staple in Japan for a long time.
Right, but maybe not as well known globally.
Definitely not compared to, say, candlestick patterns. Patel actually highlights that in the book.
What does he?
Yeah, he says if you do a quick search online, you'll find tons more about Japanese candles than Ichimoku.
Huh. Interesting.
So our goal here, our mission for this deep dive, is to give you a focused look at the core ideas behind this Ichimoku Kinko Hyo system.
Cut through the noise, basically. Help folks understand if this approach, could be valuable for how they look at the markets.
Exactly. And the book kicks off by making a really fundamental point about the market itself.
Okay.
Patel argues that technology, specifically the internet, and just the incredible speed of modern computers, has completely reshaped how information spreads.
And how markets react because of that speed, presumably?
Precisely. He uses a neat illustration to put this in perspective. Think back to 1927.
Okay, way back.
A phone call between New York and Washington was like, major news, big deal technology demo.
Right, amazing for its time.
Then jump to the mid-'80s, personal computers were just taken off.
Yeah.
Still clunky by today's standards, but, revolutionary then.
I remember those days, barely.
Oh, yeah. Now fast forward again to the internet era in the 90s. Suddenly, news from anywhere hits everywhere else in, fractions of a second.
Instantaneous, almost.
And Patel suggests this creates rapid-fire chain reactions in financial markets. And importantly, it involves a much wider range of people now.
Like individual retail traders, not just the big institutions.
Exactly. More participants, faster information flow. It's a different game.
So, with things moving at warp speed and more people playing, the book proposes a way to maybe simplify trading decisions.
That's the core idea. The central theme behind Ichimoku Kinko Hyo, as Patel presents it, is to really focus on the price action itself.
Price as the primary indicator.
Pretty much. When to make a trade, look at the price. It's about stepping back from that indicator jungle you mentioned.
Getting back to basics in a way.
Mm-hmm.
What's the price actually doing?
Right. Now, it's worth mentioning, Patel does acknowledge that if you're comfortable combining approaches...
Like technical and fundamental.
Exactly. You could certainly integrate this technical system with fundamental analysis, looking at company financials, central bank stuff, whatever.
But the main strength of Ichimoku, according to the book,
lies in its focus on the information you can get directly from the price charts.
Okay, so the market's changed, focus on price. Where does it go next?
Strategy.
Strategy, right? Having a plan.
Yes, absolutely crucial. Patel emphasizes that trading without a plan is, it's like setting sail without a map or a compass. You're just drifting.
Makes sense.
He uses a really evocative analogy here. Think about a cougar stalking its prey.
Okay.
It doesn't just rush in blindly, does it? It observes patiently, waits for the right moment, looks for vulnerabilities before it pounces.
Analysis before action.
Precisely. As a trader, you need to analyze before you execute. Otherwise, as he puts it, you're essentially just gambling.
Which leads to something the book states up front. Trading is neither logical nor predictable.
Right. It's not about being certain. It's a probability game.
So the aim of a trading system isn't about being right every single time.
No way. It's about tilting those probabilities in your favor, maximizing gains when your analysis is correct, and critically minimizing losses when it isn't.
Riding the trends.
Riding the trends, yeah. And this is a point the book really hammers home for you, the listener. Your trading plan has to resonate with you.
With your own mindset, your personality.
Exactly. There are countless strategies out there, but if the one you choose clashes with how you naturally process things or how you react to, say, a losing streak...
You're setting yourself up for failure, probably.
Or at least a lot of frustration.
Yeah.
The key is finding a system that clicks with you, that feels right for your temperament.
Got it. So let's dig into the toolkit itself. Technical systems. The book defines technical analysis simply as looking at price and time action.
Yeah, the relationship between price and time.
But man, as someone who's been there, that can spiral into crazy complexity really fast.
Yeah.
I can definitely relate to Patel's term, death by indicators.
Huh. Yeah, he throws out a whole list, doesn't he? Fibonacci, Gann line, CCI, ATR, stochastic.
Market indexes, TRN, S&P futures, pivots. It's like alphabet soup. You can drown in it.
It's so easy to get bogged down trying to make sense of a dozen different signals all flashing at once.
Ugly. And while fundamental analysis, digging into company financials or central bank policy has its place, the book points out its limitations too. Like, accounting practices can sometimes hide things, right?
Or some unpredictable global event just throws the whole thesis out the window.
Yeah, so relying only on fundamentals isn't foolproof either.
Not at all. So contrasting with all that potential overload, Ichimoku Kinko Hyo is presented as this technical system focused on identifying support and resistance.
With the goal of understanding the market with one glance. Is that realistic?
Well, that's the aim, to bring a sense of clarity to cut through the clutter on your chart.
Okay. The book mentions Goichi Hosada, the developer.
Way back in 1948, yeah. And Hidenobu Sasaki, who wrote about it later.
But it says the focus isn't really a history lesson, right? It's about using it now.
Exactly. Practical application in today's markets. That's the goal.
All right, let's get to the components. The building blocks of Ichimoku.
Okay. So the book mentions that while Ichimoku can be applied to various time frames, short-term, weekly, whatever.
Their examples mainly use the daily chart.
Primarily, yeah. The thinking is the daily often gives a more stable, less noisy picture of the main trends. Filters out some of the intraday chop.
Makes sense. And the standard settings are important.
Yes, you need to know the standard parameters. It's a 9-period Tenkan-sen.
Joke 9.
A 26-period Kijun-sen.
26.
A 26-period Chiku span.
Also 26.
Then Senku span A, which uses the 9 and 26, and it's shifted forward by 26 periods.
Forward. Interesting.
And finally, a 52-period Senku span B, also shifted forward by 26 periods.
52 and shifted forward. Got it.
The book notes that while some traders do mess around with these numbers, they stick with the original time-tested parameters for their examples.
Okay, stick with the defaults to start. Let's unpack these lines.
Yeah.
First, Tenkan-sen.
Right. The book describes it as a short-term average, specifically the midpoint between the highest high and lowest low over the last 9 periods.
So kind of a fast-moving average.
Exactly. Its job is to act as dynamic short-term support or resistance and give you a quick read on the immediate trend direction.
Okay. Next is Kijun-sen.
Kijun-sen. Same calculation midpoint of the high and low, but over 26 periods instead of 9.
So slower, more medium term.
Precisely. Think of it as a more significant level of support and resistance. It represents the underlying trend more reliably.
And it takes more price movement to change its direction.
Yeah, exactly. It's less reactive than the Tenkan-sen. Needs a bigger push from the price to really start turning.
The book uses an analogy to explain how these interact.
Right.
People walking in a park.
It does, yeah. It's actually quite helpful. Imagine the Kijun-sen is, say, John. Walking at a steady pace, he's the medium-term trend.
Okay, John is steady Kijun.
The Tenkan-sen is Mary. She walks a bit faster, maybe darts around a bit more, reacting to short-term path changes.
Mary is faster Tenkan.
And the price itself is Ben. Sometimes Ben walks right next to Mary, sometimes he runs ahead, sometimes he falls back.
Ben is the price, always moving.
So in a strong uptrend, maybe Ben, price, and Mary, Tenkan, are way out ahead of John Kijun.
They separated.
Right. But if Ben and Mary then slow down, pause, or start heading back towards John,
that could signal consolidation. Or maybe the trend is weakening.
Exactly. It might suggest pause, or if they actually cross below John, it could signal a potential trend shift. It's all about watching their relationship, how far apart they are they coming back together?
Interesting visualization.
Yeah.
Okay, what about the Chiku span? That sounds unique.
It really is. It's super simple in concept. It's just the current closing price.
Today's close.
Yep. But plotted 26 periods back in the past on your chart.
Plotted backwards. Why?
It acts as a momentum indicator, and it helps you spot potential support and resistance by comparing today's price level to where the price actually was 26 periods ago.
So comparing now to then.
Exactly. The book explains that if the Chiku span is currently in what they call open space,
meaning it's not hitting any past price bars.
Right. If there's nothing there 26 periods ago where the chick is plotted now, it suggests the current move has strong momentum. There are no immediate past obstacles.
Clear sailing, so to speak.
Kind of, yeah. Conversely, if the Chico span is currently tangled up with the price candles from 26 periods ago,
bumping into old price levels,
it might indicate consolidation, Or that the current move is running into resistance or support from that prior action. Think of it like a confirmation check.
Okay, that makes sense. It adds another dimension. Now, the big one, the Kumo cloud.
Ah, yes, the cloud. Visually, it's the most distinctive part of Ichimoku. It's formed by two lines, Senku span A and Senku span B.
And the space between them is the cloud.
That's the Kumo. So, Senku span A is calculated as the average of the Tenkin-sen and the Kijun-sen.
Okay, average of the first two lines.
But here's the key difference again. It's plotted 26 periods into the future.
Plotted ahead, like a forecast.
Sort of. It forms one edge of the future cloud and is considered an area of potential future support or resistance. It's projecting possible zones ahead, not reacting to now.
Gotcha. And Senku span B?
Senku span B is calculated differently. It's the average of the highest high and the lowest low over the past 52 periods.
Longer term, 52 periods.
Right. And it's also plotted 26 periods into the future. It forms the other boundary of the cloud.
And is it considered stronger support resistance?
Generally, yes. Because it's based on a longer look-back period, 52 versus the components of span A, it's often seen as a more significant potential barrier.
So the Kumo cloud itself, the space between A and B plotted in the future. What does that represent?
It's often interpreted as representing the overall market sentiment looking forward.
How so?
If the current price is trading above the future cloud, sentiment is generally seen as bullish.
Okay, above is bullish.
If the price is below the future cloud, it's considered bearish.
Below is bearish. Makes sense.
And if the price is trading inside the cloud itself...
Uh-oh. Uncertainty. Sideways.
Exactly. It suggests a period of equilibrium, uncertainty, or maybe choppy sideways movement. The trend is unclear.
And the thickness of the cloud matters.
It often does, yeah. A thick cloud is generally seen as representing a stronger zone of potential support or resistance than a thin, wispy cloud. Harder for price to push through a thick one.
Right, more substance to it. Okay, so those are the core components. The book then gives an example trading plan.
It does. It transitions into providing a basic example, putting these pieces together. But it's really important for you, the listener, to understand this is just a starting point. An illustration.
Not a prescription.
Definitely not. The authors strongly recommend you adapt and refine any plan to fit your own style, and crucially, test it out extensively in a simulated environment first.
Paper trading. Always good advice. What's in their example plan?
This particular example includes focusing only on currency pairs, limiting yourself to maybe 4 pairs at a time.
Okay, focus.
Allocating no more than, say, 20% of your total capital at any one moment across all trades.
Risk management.
Specifically avoiding margin leverage, which can magnify losses just as easily as gains.
Very important for beginners especially.
And a rule against adding to positions that are already losing money. Cutting losses, essentially.
All sound like solid risk principles within an Ichimoku framework.
Yeah, presented as foundational elements.
So after outlining a plan, the next logical step is testing it, right? Backtesting.
Exactly. The book discusses backtesting next. Taking your proposed rules and applying them to historical market data. See how they would have performed.
But with the big caveat, of course.
That past performance is absolutely no guarantee of future results. Markets change. But backtesting gives you valuable insights.
Into potential strengths, weaknesses.
Right. And the book makes a really key point here for you. Look closely at the losing trades during your backtest.
Not just the winners. Why?
Understanding when and why your system loses money is critical. It helps you evaluate its robustness and, just as importantly, understand if you can mentally handle those inevitable losing streaks when they happen live.
Yeah, knowing the downside is crucial.
Absolutely. Now, even with a well-defined, back-tested system like Ichimoku, the book emphasizes success isn't guaranteed.
Ah, the human element. Psychology.
Bingo! This brings us to the vital aspect of your own psychology as a trader. Your biases, your emotions, they can be the biggest hurdles.
Like the tendency to follow the herd. Buy high, sell low.
That's a big one the book touches on, how that instinct can lead you astray. Your gut might scream buy when your tested system says sell.
Which is why having confidence in a system you've tested is so important, to override that instinct.
Precisely. It also addresses the, frankly, high failure rate among traders. Even smart, motivated people struggle.
It challenges that idea that every trade is just 50-50.
Yeah, it explores the psychological factors that stack the odds against many people, despite their desire to succeed.
And a huge part of that is accepting losses, isn't it?
A really crucial takeaway. Losses are inherent. They're not bad. They're not a sign you failed. They are simply the cost of doing business in a probabilistic environment.
Internalizing that must make it easier to stick to the plan.
Much easier. You don't get thrown off course emotionally by every losing trade.
The book also stresses finding a system that fits you personally right. No holy grail.
Exactly. Your lifestyle matters. How much time can you actually dedicate? Your risk tolerance, your emotional makeup. There's no one-size-fits-all perfect system. It has to fit your life and personality.
And it mentions that many winning systems actually lose more often than they win.
Yeah, isn't that fascinating? Their profitability comes because the average size of their winning trades is significantly bigger than the average size of their losing trades.
So a few big wins outweigh many small losses.
Exactly. The book mentions the famous turtles trading system as an example of that principle. Win rate wasn't super high, but the wins were big when they came.
And that conviction, you need to stick with it.
Has to be earned. Through your own diligent historical testing, you need to see it work and see it fail across different market conditions to truly trust it.
Especially during drawdowns, those losing periods.
Absolutely. You need to know what kind of drawdown is typical for the system and be emotionally comfortable that you can withstand it without abandoning ship.
And keeping a trade log helps with all this.
The book strongly recommends it. Meticulously record why you entered, why you exited, especially for losses.
To spot patterns, bad habits, harmful beliefs.
Exactly. It's like a diagnostic tool for your own trading behavior and thinking. Invaluable.
Okay, the book then touches on day trading with Ichimoku.
Briefly, yes, but with a very important word of caution.
Ah, the allure of quick cash.
Right. Day trading is often romanticized, but the book shares some cautionary tales like the story of Craig Mazeska.
To highlight the dangers. Overconfidence, greed, trading without a plan.
Precisely those things, especially dangerous in the fast pace of day trading.
So patience, discipline, consistency are even more critical for day traders.
Absolutely paramount. The book suggests beginners should set really realistic monthly profit targets. Don't shoot for the moon right away.
Start small, build consistency.
Yeah, gradually adjust targets as you gain experience and understanding.
Does it offer a modified plan for day trading?
It does. It suggests adjustments to that example plan, like specific profit targets, loss limits per day or per trade.
Tighter controls.
Exactly. Maximum trades per day, max loss per trade, suggested initial capital, how to size positions based on targets.
And even suggests a specific instrument.
Recommends focusing on something like your USD initially, mainly because it usually has very tight spreads, which is really important for short-term trading costs.
Okay. And it shows examples of day trades, wins and losses.
Yeah, concise examples, like entering on a pullback to the Kijun Sen or the Kumo Edge as potential setups.
But also showing how trying to trade inside the Kumo cloud
can often lead to getting whipsawed back and forth. Smaller losses, but frustrating if you don't have clear rules.
Right. So wrapping up the book's message.
It really circles back to the core themes for you, the listener. First, create a trading plan, your business plan.
Got it. Plan first.
Second, incorporate a technical system like Ichimoku as your analysis tool.
The toolkit.
Third, practice sound money management to protect your capital. Absolutely critical.
Protect the downside.
And fourth, above all else, stick to the plan. Adhere to it consistently, even when your emotions are screaming at you to do something else. Discipline.
Discipline, discipline, discipline.
And it reiterates that ultimately your success hinges on your effort, your research, your backtesting, your critical thinking as markets evolve.
It's not passive. You have to do the work.
Exactly. The book also points towards some web resources for further learning and feedback.
Okay, great.
So, we've covered a lot of ground today. This deep dive has hopefully given you a solid foundational understanding of the Ichimoku Kinko Hyo system based directly on that book you sent.
Yeah, it feels like we've really unpacked the core ideas. The key takeaways for me are that pursuit of simplicity within complexity.
The one glance idea.
The absolute necessity of a personalized trading plan.
Tailored to you.
And that often underestimated but totally critical role of trader psychology. Your own mindset.
Absolutely. Can't overstate that one.
So you now have a framework, hopefully, for exploring Ichimoku further if it interests you.
Yeah, we really encourage you to think about how these principles, the focus on price, the structured plan, awareness of your own biases, might apply to your own trading or even just how you understand market analysis generally.
Definitely food for thought. And with that in mind, maybe here's a final question for you, our listener, to ponder.
Okay, let's hear it.
In this world of seemingly endless trading indicators, complex algorithms, all this noise. How might deliberately focusing on the core components of a single well-defined system like Ichimoku,
instead of getting lost in that sea of signals?
right, how might that fundamentally reshape how you interpret and react to what the market is actually doing?
Good question, simplifying to see clearly.
We'd be really interested to hear any thoughts or follow-up questions this deep dive has sparked for you.
Yeah.
Thanks so much for joining us today.